Hello, good morning. It's Adil Fazal here, market analyst at CFDs.com. Be sure to visit CFDS.com for your trading needs. You can certainly qualify for the potential bonus on offer as well for all new accounts. Alternatively, you can visit the educational site, which I update regularly throughout the day, which is www.cfds.education. Okay, this is a morning market wrap up. It has been some time now, over a week, I think. As you can see from my voice, I'm not still 100%. Given the fact that this cold that's going around at present, it's quite intense. My voice was almost on the verge of extinction last week, but I managed to get through it now and overcome a majority of the actual cold. So hopefully back to making videos now on a daily basis for morning market and afternoon, and obviously US market analysis as well. Okay, so in terms of summation, in terms of the markets themselves, let's just bring up the actual data itself. You had the Shanghai index down almost 5% overnight. The weaker inflation data that came out over the weekend certainly was better than expected to a large extent, although it certainly left the door open for additional stimulus, which obviously has not been interpreted as being bullish by the Chinese stocks. The Nikkei though was actually down only 0.4%, so that was a shining light. Now the Shanghai certainly is into support, as you can see here on the daily chart. We are now coming into multiple levels of support for the Shanghai, and the Nikkei itself as well. The Nikkei certainly did attempt a reversal on the actual market itself, so you do have support for the Nikkei as well. Now there is an argument here now that the Asian markets certainly are finding their foot and certainly are building a potential base, especially given the fact that the European markets have shrugged off the weakness in China, okay, and have totally ignored that and certainly traded higher. So again, that's something certainly to consider from a trading perspective. Now we did have the indices, or the actual indexes, down quite substantially overnight, but the market certainly has reversed that to a large extent and shrugged it off. So certainly is a positive sign, okay, especially given the fact that the euro has been crushed. It was down the 1.0875 region at one point before it started to reverse. Okay, now economic data this morning in terms of the European markets, we've had industrial output from Spain stronger than expected, retail sales weaker than expected in Switzerland, or CHF, and obviously Eurox Centix investor confidence actually coming in lower than expected. So that certainly is something to consider going forward in terms of trading today. Okay, now in terms of the indices, let's try and see exactly where we stand. Bring up the Euro stocks first of all. Now we look at the daily chart of the Euro stocks, and you can see that we are into potential support now, and this market certainly is holding. Now we do have this level here, and obviously the gap that was potentially closed as well. So certainly horizontal support on the actual Euro stocks itself. Looking at a 60-minute chart, you obviously have this double bottom, triple bottom scenario where we are holding and potentially looking to move higher. 10-minute chart as well, you are building a potential base. The downtrend obviously certainly is potentially over, and you are looking for a potential thrust higher from here. Okay, so again, Euro stock certainly is building a base and looking to move higher. Now this can be confirmed from the S&P European 350. You can see that we are into horizontal support, and we seem to be holding. The German DAX itself on the daily chart, you obviously have held this diagonal trend line and looking to potentially bounce. The 60-minute chart has held that double bottom and therefore looking to build a base and move higher. So again, certainly something to watch out for and consider as well as traders. So we've had this downward sloping trend line. We've tested previous resistance equals support, or previous support equals resistance. We have flushed back lower again, but the support region certainly is expected to hold given the thrust higher this morning. So again, potential base here for European markets. Now the MDAX certainly is into potential support there. The tech oil share, although it has dipped below, it certainly does remain vulnerable, and certainly keep an eye out in terms of the next move there. Now the actual volatility, this is the most important, I think. The volatility, the topping tail certainly has held so far. Okay, the topping tail that was registered closed the gap that was here, and therefore looking to potentially move in the opposite direction. So certainly a topping tail, and therefore it's positive for risk. Okay, now the Euro stocks, the V stocks gap itself, you can certainly see that you have a potential hanging man candle Okay, and you're looking at a potential reversal there as well. So signal at the top, so it's a hanging man reversal signal. Therefore, you are expecting risk certainly to potentially build a base here and attempt to propel higher. That's my interpretation thus far. Okay, so again, all eyes on the VIX here for European indices and looking to potentially thrust higher as well. Bringing up the CAC itself, now bring up the CAC, the daily chart, the French CAC. You can see that we have closed that gap, and that gap level has been attempting to hold the market up and keep it afloat. The 60-minute chart, again, like I said, you got a potential double bottom scenario here. Okay, so once you hold that double bottom, and then obviously we look to potentially thrust higher. Okay, so a base obviously has been built here. Again, double bottom, and then obviously we are looking to rise. Now you do have this downward sloping formation here, so again keep an eye out for this downward sloping contracting formation, and obviously looking to thrust higher. The FTSE 100 itself, again, this has been impressive given the fact that European indices have been under pressure severely. The FTSE is holding support at the 5880 level. That's the horizontal support, looking to potentially build a base. 60-minute chart, double bottom expected to hold, and we are looking to break out this bearish channel and potentially test the intraday high there at well, you have previous resistance or previous support equals resistance around the 6010 region. Now that certainly is a target on the upside for the FTSE 100 and looking to break out. Okay, so in terms of the actual commodities, now I can see that the oil price certainly is holding that double bottom pivot low around the $32 level. If that holds, then obviously that's bullish for equities, and the markets are expected to move higher. The dollar index obviously has built a base now, or built a level of resistance, and you are looking at a reversal there. Hence the reason why I'm actually long the Kiwi dollar itself. Euro USD certainly has built at base now at the 1.0940 region, and therefore we work off there for our next potential move lower. So again, that will be bullish for equities. Now looking at the Aussie itself, bringing up the daily chart, you can see that we are into support and building a base. Bringing up the Kiwi chart on the 10-minute daily basis, you can see that again we have put a potential bottoming tail, and we are looking to build a base and potentially move higher. So again, this is all bullish news for equities. Okay, FTSE 250 as well, building a base. Now Stock 600 again is into potential support. So all multiple indices are into support and looking for an argument to move lower. Now the catalyst itself may well be QE, given the fact that the euro obviously has slumped quite substantially, or could be other factors. So again, keep an eye out for the markets themselves, and we shall see basically how the markets react. But certainly looking for a move higher on the FTSE, looking for 6,000. Okay, I think that's a market wrap. Be sure to visit cfds.com for your trading needs. Goodbye now.